Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
What's up? Welcome back to another Weekly Spark. This week, we are going to revisit one of these awesome loan programs that we're feeling is a little underutilized, and we'll tell you why we're revisiting it at that time. Jason, how you doing, buddy?
Doing great, Ryan. Thanks for asking.
Awesome, man. Let's jump right in. Got a little glow up on this little slide here. I'm digging the new profile picture, so I had to throw it on there. So first topic we've got, and this is a big one, so we're going to focus a little bit heavier on this one, the rate cut overview. So, we've been talking about rate cuts kind of happening, coming in. What's changed recently that we want to focus so hard on this one?
Yeah, listen, so Fed Chair Jerome Powell last week finally admitted at Jackson Hole that the job market is slowing. And this has been great news for the bond market. We've seen a great rally, and we'll check out the charts later in this show. But since then, we've seen a nice reduction in these rates. But Ryan, we've known this for quite some time by looking at the actual jobs report and unemployment numbers that we need a rate cut because the job market is stagnant. I mean, listen, the economy only added 73,000 jobs in July, well below expectations. And think about this. There's roughly 7.2 million people unemployed. So only about 1% of people that weren't working gained employment. So that doesn't seem like a solid job market to me. Meanwhile, the unemployment rose to 4.2% in July. And keep in mind that there were negative revisions from the earlier data from May and June job gains. So they were revised downward by, get this, over 250,000 jobs. Ryan, if me and you were on this, if we were this wrong about the numbers in the labor market, we would be fired. But why does this matter? Well, because higher rates are the culprit for hiring restrictions, mainly because they raise costs for businesses and it slows consumer demand. We've seen that in the housing market, but thankfully we've seen rates finally come down to low levels because of all this. And Ryan, I think we should break down the numbers on the chart and just show our audience what we're talking about here.
Yeah, absolutely. And you can never be more right about how we've seen this coming. And, I want you to kind of break that down in the chart here and show us, what has he been missing?
Yeah, so, we saw this nice jump in the bond market here, and we've kind of ridden this Fibonacci line for quite some time, not really knowing which direction we were going to go. So on Friday, this is the day that Fed Powell came out and said, hey, you know what? The job market is slowing. And we saw this great jump up and what do you know, right to this next Fibonacci level that we're sitting at right now. So, a lot of people are waiting on the fence for the Fed rate cut to happen in September. But just like on a stock, Ryan, when we talk about, to buy the rumor, sell the news, like this is the rumor that we're going to cut rates. We're already seeing this 50 or 60 basis point increase. So refinances, 45% of all transactions are refinances now. And this is the big reason why. And if we can hold on this line, we may have a ton of room to move to the upside. However, at the same token, if we don't hold this, we can come back down. So if you're on the fence, let's go ahead and make a move if the rates make sense for you.
Yeah, now is kind of the time where we're in that in-between where you can take advantage of that small window, right? We've seen this already be priced in with the probability. I think I've seen somewhere in the range of 80% of the probability of a rate cut now. So that's priced in. So we're not going to see it. And like we talked about last week, we may even see a rate jump if they don't cut it to the levels that they're expecting. So let's take advantage of the opportunities we got. That brings me back to our loan program of the day. Where'd that go? There we go. The loan program of the day. And as we've talked about this before, but DSCR loans, with those better rates, what are you seeing as far as opportunities with this loan?
Yeah, so as we see rates come down, Ryan, we're going to see more affordability, not only for primary residents or primary and first-time home buyers buying houses, but also making deals work for investors. So realtors, this is a great opportunity to look at either files that maybe didn't qualify before, that we can see where these new rates fall in line, where the cash flow is better for investors. And if you're not working with investors, guys, this is keeping us extremely busy. We work with a lot of investors, and these products are great because remember, they help self-employed individuals that can't prove income. You can close in an LLC, and they're very, very easy to get done. So if you've got investors looking for cash flow properties, this is a great way to do it.
Yeah, one of my favorite things about DSCR loans is the marketing aspect of it, of being able to, once you just get a brief understanding of how they work, you can kind of reiterate the same marketing over and over again. And then once you get an investor client, we're seeing the same people come back and buy 2, 3, 4, 5 houses because they don't have to qualify based off of their personal income. So what does that do for you as a real estate agent? Well, if you only have to get one person that gets you 5 deals in a year, and that's not a joke, that happens, get you 5 deals in a year, how many less clients do you have to chase now? How many less homes do you have to go out and show? It's just a great all-around business strategy as a real estate agent and as a mortgage lender to be able to utilize this loan program in a way that grows your business tremendously. So that's my little soapbox. If you do need some extra help with marketing on the DSCR loans, I do have some built out scripts that I've created for videos for myself that are easily adaptable for real estate agents, and more than happy to send that to you. So just reach out and ask for that. But I think that's all we got this week. Jason, you got anything to add?
That's it. We nailed it. Have a great week, everybody.
All right. We'll see you on the next one.
That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.